Riding the roller coaster. A week of ups and downs. The Indian stock market had an eventful week, full of twists and turns. From March 3rd to March 7th, 2025, investors experienced both the thrill of gains and the disappointment of losses. Global factors and domestic news played a tug-of-war, leaving the market uncertain about its direction. Join us as we unpack the highs and lows of this volatile week. Sensex and Nifty. A mixed bag of returns. The benchmark indices, Sensex and Nifty 50, painted a mixed picture. The Sensex, representing the top 30 companies on the Bombay Stock Exchange, closed the week with a marginal gain. Meanwhile, the Nifty 50, tracking the performance of the top 50 companies on the National Stock Exchange, ended slightly lower. This indicates a lack of clear market direction. The Sensex started the week strong but faced resistance midweek due to negative global cues. However, it managed to recover some ground by Friday, ending the week on a somewhat positive note. The Nifty 50, on the other hand, struggled to maintain its momentum and succumbed to selling pressure towards the end, closing the week in the red. Sectoral spotlight. Where did the money flow? While the overall market sentiment remained subdued, certain sectors outperformed others. The IT sector emerged as a clear winner, driven by strong earnings reports from major companies and a weakening rupee, which boosted export prospects. The pharmaceutical sector also witnessed buying interest, fueled by hopes of increased healthcare spending in the upcoming budget. On the flip side, the metal and energy sectors felt the heat due to rising commodity prices and concerns over inflation. The automobile sector also remained under pressure, grappling with supply chain disruptions and rising input costs. This sectoral divergence highlights the importance of careful stock selection in a volatile market. Corporate corner big players make big moves. This week saw several major companies making headlines with their performance and announcements. Dr. Reddy's Laboratories surprised the market with better-than-expected quarterly results, driven by strong sales in its generics business. This news sent its stock soaring, bringing cheer to investors. UltraTech Cement, India's largest cement manufacturer, reported a dip in profits due to higher fuel costs. However, the company remained optimistic about future growth prospects, citing increasing infrastructure spending in the country. NTPC Limited, India's largest power generator, announced plans to invest heavily in renewable energy projects over the next few years, showcasing its commitment to a greener future. This move was well received by investors, who are increasingly focusing on ESG, environmental, social, and governance factors. Hindustan Unilever, the FMCG giant, posted steady earnings growth, driven by strong demand for its products in both urban and rural markets. The company's focus on innovation and its wide distribution network continue to give it an edge in the competitive consumer goods market. Looking ahead, what's in store for the Indian market? The Indian stock market remains sensitive to global developments, including interest rate hikes by central banks and geopolitical tensions. Domestically, investors are eagerly awaiting the upcoming union budget, which is expected to provide cues on the government's fiscal policies and its impact on various sectors. While the market is likely to remain volatile in the near term, long-term investors can use this opportunity to accumulate quality stocks at attractive valuations. Factors such as strong corporate earnings, robust economic growth, and favorable demographics continue to make India an attractive investment destination. However, staying informed and making well-informed decisions is crucial in navigating the dynamic world of the stock market. What are your thoughts on the current market scenario? Share your views in the comments below.